Lawmakers noticed that the Facebook IPO didn't go exactly according to plan. Now they're looking at the IPO process, pushing for some changes in it. There's an A1 story in the Wall Street Journal today, and who's going to tell us about it? The author herself, Jean Eaglesham. Morning, Jean. How are
Morning.
you?
Very good.
Let's talk about this. Tell me exactly what the lawmakers noticed, let's say that, about the IPO for Facebook.
What they said is that the problems with Facebook, and in particular the fact it's now trading, well under the price it was offered at. So there's these small investors sitting on quite substantial losses in some cases. And what they're saying is the lawmakers on both sides of the aisle, is they're saying the whole Facebook debacle of what happened has exposed significant flaws in the way the law operates here. This is a law that goes right back to 1933, which is when the SEC itself, Securities and Exchange Commission, was formed. So it's a 79-year-old law, and what they're saying is they think the way the system operates, it favours the investment banks who put these IPOs together at the expense of the small investors. And what we saw with Facebook was not only this concern about how the price was set, but also about what information was given to certain investors. So the SEC is looking at whether
that was the report about their sales and the projections went out to some investors early, right?
Exactly. So this is about the Morgan Stanley and the other underwriters of the IPO passing on analyst warnings about Facebook's financials to certain selected clients when retail investors weren't necessarily aware of those. Now that may not be wrong, but what the lawmakers are saying is, hang on, is there a problem here that investors are getting, not the right information at the right time? Is there a problem indeed with the whole way that the price is set, with the way these IPOs work?
Now, is this, here's my thought. Did the Facebook IPO represent some kind of a change in how IPOs are done? Or is this really something that just illustrated a process that probably is flawed?
I think from what the lawmakers would say is, this has just exposed something that's been a problem for a long time. They've had concerns for a while. The number of IPOs has been falling over recent years. There's a general feeling that investors are losing confidence in the broader markets. We had pressure last year, a very similar style of pressure on the SEC for reform, and that ended up in this year's Jobs Act. So what they're doing, I think, is trying to agitate the regulators and saying, look, we need to look at this process as part of a wider problem. And Facebook just happened to be a very, very high-profile example.
Now we're going to pull here some comments from Darrell Issa, the California representative, who's really spearheading this whole thing. You can see here, this is the letter that they sent to the SEC. They said the Facebook IPO taught us that at a minimum, the IPO process suffers substantial flaws. In fact, it appears the entire IPO regulatory framework, based on an outdated Securities Act of 1933, fails to provide a market-based solution to IPO pricing. Now, automatically we can tell you what Morgan Stanley is going to say, right? I mean, it's in your story. They said, look, the thing rose the first day, right? That proves that we priced it correctly. The fact that it went down about 30% in the weeks after that might sort of, contradict that. Do you think they have a point?
I think the point that they're getting at is the whole way this is done seems odd in our current sort of internet-based economy where so many things are decided by supply and demand. We're used to that operating in all areas of the economy. And here you have the system where the underwriter goes out, finds out what interest there is from big investors, takes soundings, sets a price that way. And it's a very sort of opaque system. And what they're saying is, why don't you have something like an auction where everyone puts in bids for how much they buy and at what price and set the price that way?
Which is actually what Google did when they went public back in 2004.
Exactly. It's exactly what Google did. It can be done. Now, not that many people have taken this route since. And certainly there are other people who would say, actually, the investment banks add value. Now, you need their expertise.
Before we go, because we have to cut this one out, are these guys serious or are they just grandstanding? Are they really looking to change this or are they just kind of jumping on a big issue?
I think it's probably a bit of both, to be honest, but they definitely, I think they feel there are significant arguments here for reform. They're definitely going to keep up the pressure on the regulators. And I think the fact that we've got both parties in Congress now pushing for this, we may yet see changes.